In this video, traders, we're going to look at the eye of the storm trading setup rules. Stay tuned. Hey traders, welcome, a very warm welcome to you. Okay, so I have coined this trade setup the eye of the storm. The idea of this trade is we're looking for markets that are trending in one direction. We're waiting for the calm eye of the storm to hit. You know, when a storm hits, a lot of wind in one direction, then there's an eerie calmness before bang, we're off again and there's strength. Now, obviously in the hurricane, it flips in the other direction, but in this instance, in the market, we're looking for a continuation of the trend. So where would you use this? You could use this on currency pairs, you could use this on cryptos, indices, commodities, individual stocks, as long as they're a decent market cap and a decent volume, anywhere where you have got some decent liquidity, some decent movement coming in. Okay, let's look at the rules, let's look at the setup, let's look at the thing in more detail. So, daily chart, one for the swing traders out there, not an intraday setup. This is one for you swing traders out there. All right, so rules. Number one, ADX has got to be above or equal to 30. ADX is really just a very simple, easy way of saying, hey, is this thing trending? If it's above 30, yes, it's trending. And it's not directional, so it's above 30, it could be trending down, could be trending up. The example I'm giving here is for an uptrend and we're going long. However, we're just going to flip it on its head for any short trades. And actually, it's probably quite more powerful on the short side, if I'm honest, because short entries like this are often very lucrative. Right, so ADX above 30. You could use something different for that. You could use an RSI overbought. You could use a distance away from a 20-period moving average, above a 10 period, something like that. But ultimately, all this first rule is a filter to say it's trending. Right, number two. Day 3 high, less than day 2 high, less than day 1 high. What? That sounds like a real load of mess, but let me just show you. Okay, before I show you, this third rule is that day 3 low has got to be greater than the day 2 low, greater than the day 1 low. What does that actually mean? Imagine these 3 candles here, or these 3 bars to be precise here. You've got basically day 1 here, day 2, day 3. You want an inside day, an inside day, 2 days, an inside day after one. So 1 is here, day 2, as long as you've got a lower high and a higher low, that's great. And then you've got to have a third day where you've got to have an even lower high and even higher low. So just indecision. You know, you've got the ADX has filtered you out for the trend, the good pushing on the trend. That's that part sorted out. Then you've got this indecision. You've got this eye of the storm where, hey, this is pretty much quantifying a traditional flag. Traditional flag setup is a push higher. You know, we sit in a kind of consolidation or a pennant, really, if we're being precise about it. A pennant would be more of a triangular shape, and then we're exploding out. But this is kind of quantifying it and enabling to use filters perhaps with your charting software or whatever screening tool you've got, so that these are brought to your attention. But anyway, inside day, that's pretty much what those rules are telling us, that if statement there. Now, how do we get into the trade? We've got the filter for the trend, we've got the filter for the eye of the storm. How do we get on board this trade for a potential explosive move? One thing to say, guys, is this is quite a rare setup. So if you see it, it might be worth paying attention to. Okay, so now what do we do? What's the entry criteria for the trade? The long is above the day 3 high. So that final day we had, that final inside day, the narrow range, it was narrower than range before, which was narrower than range before that. We're buying above that high on the 4th day. So we need day 1, day 2, day 3. That's our filters. Once they're all met, the ADX is met before that. Day 4 is the trigger. If we break above the high of day 3 on day 4 here, we are now going long. Now, I would always recommend with this kind of stuff, never putting your entry or stop entry just at the high. You want it a reasonable amount above, not too far that you're chasing it, but just enough that you're not going to get pinged out on noise. I realize that's a bit of an art. That could be 10 pips, 20 pips, 10 ticks, 5 ticks, 5 cents. Look at the volatility of the market you're trading. Look at the average range of the day and make your assessment on that. But you just want it just above that high. Not too much, but just above it. Once you're in, you're bringing your stop below the day 3 low. So using that day 3 low to frame the trade, really, it gives us the trigger to go long and also gives us the stop if we're wrong. Stop just goes, again, we don't want it right on the low. We want a little bit below the low. There's our stop. Nice quantified risk. It's going to be a decent tight stop as well, because the range is going to be reasonably narrow compared to the range of the other days. Well, most likely it will be, because that's going to be wider, narrower, narrower. So it's going to be at least on the narrow side as opposed to a wide range stop. We are then looking for the break of that high. There's our long. I've kind of drawn over stuff, but you get the idea. There's our long there, which I'll put it on here, maybe it's easier. You know, there's our long on the day 4 here. It's day 4. There's our long right there. And the idea with this one is we're looking to hold this for a multi-day move. Ratchet that stop up, use a trailer, keep bringing it up below the lows. If you've got kind of some extension targets up there, all very well. If you want to trade it for 1 day only, I think that's fine too. You look for that breakout on day 4, hold it for a good move, close it at the close. If that's your bag, that's absolutely fine. If it closes strong, why not hold it for 3, 4, 5, 6 days? And perhaps if this is early on in a momentum move, i.e. if the ADX is high and this is kind of explosion that's really just getting started, maybe it's broken out of a channel here, maybe it's broken out of resistance, something else that gives it credibility that this thing's going to really shift, perhaps you could look for that for a multi-day move, multi-week move, something that really has got some legs behind it, and that's really this kind of the first pause of something that really could have some momentum. So that's one to look at, guys. Either storm, I'm coining it, trading setup. You're looking for a trend. ADX is a good filter for that. You're looking for that in a day, inside day, which are those rules there. You're looking to get long, very systematically above that day 3. Stop goes below day 3's low, and then up to you whether you want to hold it for 1 day or multiple days. Use your discretion on that. If it's got some potential legs, maybe just scale off a little bit and hold the rest for a runner. All right, guys, let me know how you get on with that in the comments section below. If you haven't subscribed, consider doing so here for more videos from me and other traders on the channel. Would love to have you on board. If you enjoyed this video, appreciate the thumbs up. Take care. See you next one. Bye-bye.